In 1944, as World War II was drawing to a close, delegates from 44 Allied nations gathered in a small town in New Hampshire called Bretton Woods. They weren't there to discuss battle plans or peace treaties. They were there to build a new world order, one based not on military might, but on money. And what they decided in that quiet hotel would echo through the decades, shaping the global economy and, believe it or not, still affecting the money in your pocket today. This is the story of the Bretton Woods Agreement, a deal that crowned the US dollar as the king of all currencies. Before we dive into what happened at Bretton Woods, let's paint a picture of the world they were trying to fix. The period between the two world wars was an economic disaster. Countries had abandoned the gold standard, a system where currency value was tied to a fixed amount of gold. This led to chaos. Nations devalued their currencies to make their exports cheaper, a tactic known as beggar thy neighbor. Imagine trying to trade with someone whose money could be worth half as much tomorrow as it is today. It was a race to the bottom that fueled the Great Depression and contributed to the political instability that led to World War II. The world's leaders knew they couldn't let this happen again. They needed a stable, predictable system for international trade and finance. So they came together at the Bretton Woods Conference. The two main figures were John Maynard Keynes, representing the UK, and Harry Dexter White, representing the US. Keynes, a world-famous economist, had a grand vision for a global central bank and a new international currency he called the Banco. White, on the other hand, had a plan that was much more favorable to the United States. At the time, the US held about 2/3 of the world's gold reserves and had emerged from the war as the undisputed economic superpower. In the end, American power won the day. The agreement they reached was revolutionary. It created what's known as the Bretton Woods system. Here's how it worked. In simple terms, the US dollar was pegged to gold at a fixed rate of $35 per ounce. The United States promised that any country could, at any time, exchange its dollars for gold at that rate. Then, every other country's currency was pegged to the US dollar. The British pound, the French franc, the Japanese yen, all of them had a fixed exchange rate with the dollar. This made the dollar the world's reserve currency. It was, in effect, as good as gold. Think about what this meant. For international trade, it was a game changer. Suddenly, there was stability. A German company buying American goods knew exactly how many Deutsche Marks they'd need. A Japanese firm selling to France could calculate its profits without worrying that the franc would collapse overnight. This predictability oiled the wheels of global commerce and kicked off an unprecedented era of economic growth, often called the Golden Age of Capitalism. To oversee this new system, two powerful institutions were born: the International Monetary Fund, or IMF, and the World Bank. The IMF was there to ensure exchange rate stability and provide emergency loans to countries in financial trouble. The World Bank's job was to provide financing for post-war reconstruction and development. Both were, and still are, headquartered in Washington, D.C., a symbol of where the new center of financial power was located. For about 25 years, the system worked beautifully. The world rebuilt, trade boomed, and living standards rose across the developed world. The United States, at the center of it all, enjoyed what one French politician called an exorbitant privilege. Because the whole world needed dollars to trade, there was constant demand for American currency. The US could simply print money to pay for imports, or to finance its spending abroad, without facing the same consequences other countries would. And spend it did. Throughout the 1960s, the US was financing the costly Vietnam War and expansive domestic social programs known as the Great Society. It was printing more and more dollars, far more than it had gold to back them up. Other countries started to get nervous. They looked at the flood of dollars pouring out of the US and then at the dwindling pile of gold in Fort Knox, and they did the math. The French, under President Charles de Gaulle, were particularly skeptical. They began to openly challenge the system, demanding to exchange their dollar reserves for gold, as was their right under the agreement. Other countries started to follow suit. A slow but steady run on US gold had begun. The promise that held the entire system together was starting to look shaky. The US was facing a dilemma. It could either dramatically cut its spending and trigger a recession to restore confidence in the dollar, or it could break its promise. The breaking point came on August 15, 1971. In a televised address to the nation, President Richard Nixon made a stunning announcement. He declared that the United States would temporarily suspend the convertibility of the dollar into gold. This event is famously known as the Nixon shock. That temporary suspension became permanent. In one fell swoop, Nixon had unilaterally dismantled the core of the Bretton Woods system. The link between the dollar and gold was severed. The world's currencies were no longer anchored to anything tangible. They were now fiat currencies, their value determined by government policy and market forces. The era of floating exchange rates had begun. So, what happened next? The end of Bretton Woods didn't topple the dollar. Far from it. Its legacy was already too deeply embedded. Think about it. Oil, the lifeblood of the global economy, was priced in dollars. Most international trade was conducted in dollars. Central banks around the world held massive dollar reserves. Shifting away from the dollar would have been like trying to change the language of the internet overnight. It was simply too integrated. So while the dollar was no longer backed by gold, it was backed by something else. The full faith and credit of the United States, its massive economy, its military power, and its role as the linchpin of the global financial system. But the end of the system did have profound consequences that we are still living with today. First, it unleashed a new era of currency volatility. Exchange rates now fluctuate daily, creating risks for businesses and opportunities for speculators. It also removed a major constraint on government spending and money printing. Without the discipline of a gold standard, countries, especially the United States, could run massive deficits and accumulate debt on a scale never seen before. This ability to create money out of thin air has been a major driver of inflation over the last 50 years. When the value of money is constantly being diluted, your savings lose purchasing power, and the cost of living goes up. Every time you complain about rising prices, you're feeling the long-term effects of the decision made in 1971. The post-Bretton Woods world is also one defined by recurring financial crises. The system of floating currencies and massive cross-border capital flows is inherently less stable. We've seen the Latin American debt crisis in the 80s, the Asian financial crisis in the 90s, and of course the global financial crisis of 2008. In each case, the central role of the dollar and the policies of the US Federal Reserve played a significant part. When the US sneezes, the rest of the world catches a cold. US interest rate decisions can send shockwaves through emerging markets, causing capital to flee and currencies to crash. So this quiet agreement from 1944 didn't just rearrange some financial plumbing. It installed the US dollar as the operating system for the global economy. And even though that system officially crashed in 1971, we're all still running a modified, arguably bug-filled version of that same software. The exorbitant privilege continues. The US can finance its massive trade deficits and national debt because the world needs its dollars. This creates imbalances that many argue are unsustainable in the long run. Today, there's growing talk about de-dollarization. Countries like China and Russia are actively trying to reduce their dependence on the dollar, promoting trade in their own currencies, and building alternative financial systems. The rise of digital currencies and cryptocurrencies also presents a potential challenge to the dollar's dominance. Could we be on the verge of a new Bretton Woods moment? Perhaps, but dismantling a system that has been in place for nearly 80 years is a monumental task. The network effects of the dollar are incredibly powerful. From the price of your coffee to the interest rate on your mortgage, the echoes of Bretton Woods are all around us. It's a story of power, promises, and the very nature of money itself. It teaches us that the financial rules we live by aren't laws of nature. They were designed by people at a specific moment in history with specific interests in mind. And understanding that history is the first step to understanding the complex economic world we live in today. and maybe even shaping the one that comes next. Thanks so much for watching. If you found this deep dive into economic history interesting, please hit that like button and subscribe for more videos explaining the systems that shape our world. Let us know in the comments what you think the future of the global financial system looks like. See you in the next one.